So let's look at the S&P 500. Now I'm only going to look at the S&P 500 today and share some analysis with you that I think is important. And I want to remind you that on Future Speak, which is every Wednesday, Arvi does a brilliant job bringing you updates on all of the commodities that we look at: metals, currencies, foods, energies, crypto. And he'll also bring you the not only the review of the S&P 500, but the NASDAQ, the Russell. He looks at all of those things. So it's every Wednesday for levels 2, 3, and 4. So, of course, if you take the special we're running now for level 4, you will get that. And level 2, 3, and 4 also get our full library, which has more than 1,000 videos in it. There's about 300 plus evergreen videos of all the teaching that I have done or the team has done. So you would absolutely love that. And don't forget to go to Slim AI. You can ask questions. If you're brand new, go to the front of the website and you can just talk about, with me essentially, my virtual twin, about what askSlim is all about, and he'll give you some educational answers there about any questions you might ask, except he will not tell you where anything is going, so you don't even bother asking that question. All right, so let's move forward as we look at the S&P 500 chart. So this is the weekly chart in the S&P 500. There on the bottom are the cycle brackets. That is essentially a drawing tool that helps us see flows of money. That's what it's really about. And the flows of money are rhythmic. And the nature of the formations of those cycle patterns give us a sense for market conditions. Add into that where we look at our reversal scout here, which I love to have up on a weekly chart, but a lot of our analysts, there's 4 of us, put the slim ribbon on there. They may use other indicators. I happen to just like to keep it clean right now and to use this, and then I add in the slim ribbon and other indicators, which I'll show you on the daily chart. So this is where you see the upward turn, and it told us right there that was the beginning of that cycle right there. That same thing happened over here, as you could see. This was so strong where it only corrected 3% that the reversal scout never turned down. Then it started to get choppy in here when this top was being formed, and then this big break over here and the tariff panic that happened into early April or late April of this year. So we had this massive upside move. Now this right over here, this reversal scout and this upward pressure is important because it's a dominant force and affects all of the shorter terms. That would mean that the daily, the 2-hour, however you look at interdays, would all be affected by this because the downside would not be very strong because this upside pressure prevents it. We use a word like this as swamped, which says that this decline right over here, which is this minor cycle, couldn't even fall. And there's a minor trough that formed right over there, and then it started to move up again. Now we have this reversal day bar this week, and of course, we're still open here at midday on Friday the 10th, so we don't know how that's going to finish, but we've talked about this time frame in here as a corrective period. We consider this to be the period of risk, where the dominant and the minor forces are coming down, and that's where you get liquidations, essentially. It could be mild here. We had a 6% here, a 3% here, of course, a 20-something% right over here, where you had that big major decline. But this rally went so long and this time period so brief that we would expect that it would be able to make an important bottom in here over the next, I would say, 3 to 6 weeks is what it looks like right in there. So with the downside target right over here, this minor support is about -4%. You can see that right there. And if you get to this dominant 23.6, that's 6.8%. So we'll just look at these numbers here, 64.87. This number over here is 64.21. And this 23.6% is at around 63.02. That's only a 6.8% drop. Any of these could happen during this time period. And if this issue of the reignited trade war that we're hearing going on here on Friday, if that really becomes a big issue, this decline could be quite sharp. And with the valuations, which I promised I would not say the word again, well, I lied, with the valuations this high, the declines, the reactions, just a modest correction could easily be, in that 6, 7, 8%. This right over here is that cycle low, and that would be down about 8.2%, just around 6,200. So any of those numbers could happen in here. This corrective downside force that you can see is very commonly pushing the market down in all of these periods, and that's where we are right now in this, what I consider, corrective phase. Now let's look at the daily chart. So I'm showing it to you a little bit differently now. I don't have cycle analysis on here because I want to really focus on the slim ribbon and momentum indicators. Here's what's going on right now. First of all, we're looking at the slim ribbon PO, reversal scout, and the option bias indicator. Slim ribbon is a free indicator, and that's available for Thinkorswim and for Tasty Trade and for Wealth 365 charts and TradingView. You can have it on any of those. If you want to put it on Thinkorswim, we have that script for you to download. Here is that slim ribbon. Here is the slim ribbon PO. So when the slim ribbon, I told you on this weekly chart, is moving up, the weekly chart is pushing it up, as you can see, and the slim ribbon acts as a support area. Here it only got under it for a day and then popped right back up, and here you could see it's getting under it again. So the question is this an important break? If it has another down day under it in here, you'll know it's important. Also, the slim ribbon PO on the bottom, this is giving you these upside arrows, which tells you about momentum resumptions on the upside. You can see how great it is. It really works. This is the option bias study on the bottom, which says to you, keep your option positions biased on the long side. If this gets worse in here, then this will turn blue and you will not get a resumption area. This will turn yellow, it will go to neutral, and then potentially turn red as you head back over here where it was telling you to stay short until this period right over here in the end of April, beginning of May. So here's where it turned positive, it stayed positive the whole way, and now we have this down day, and our indicators still positive. And I'll show you the MCM, the Market Condition Monitor, and that will show you that, well, the short term is still positive, but we're getting some negative changes on the near term, which is important because that's how it will start. So this is the look at it without cycle analysis. Let's just go now to our cycle analysis, and you can see on here. So we were looking for this downturn somewhere in here. We weren't sure. We've been moving these cycles around because they're very unreadable when you get into these periods where the market doesn't have any dips. So we really can't tell. So the question is, is this what we're looking at, this cycle that should have bottomed in here, but there's no trough at that point, and this came really late. That had me looking at this trough right over here, which I had rejected before as the possibility, but then I got an email from Steve P., who's a student of this work, and I was looking at it again, and I said, well, that probably is what's going on right over here. So if I just bring this in a little bit right here, you could see that somewhere over here, these cycles are pointing to the downside, and you can see in here that this really looks like it's getting through these supports and maybe to that cycle low, and it's pointing to the downside in here. So somewhere right over here is the end of October, beginning of November, and you can see that's what we're looking at. This looks like a decline that is just starting. If it breaks, look at this upward channel and how it just got down to it right here. If it breaks under that level, 66.10 approximately, gets under the support right over here at 65.68, that's going to be your message. Then all of these indicators are going to be turning negative, and the market's going to be in trouble, and it can really sell off hard to those levels that I discussed right over here, down as low as 66, near 6,300. This is near 6,200. That could happen in here. And important number, as you can see in that uptrend right over there, if it gets under that level, which is just around 66. This level, 6,600, this level here, important level around 65, 68. Gets under those, we're in trouble on the downside. Not sure which of these cycle rhythms is right, because as I said, when you have these big upside moves, then there's no clarity. Here you could see there was clarity because the market was moving to the downside or had volatility. Speaking of volatility, let me just look quickly at the VIX right in here, because the VIX is popping. And this is exactly the spot we talked about it popping. I mean, this is just perfect. As we expected it to go up there on the daily chart. Here it is on the weekly chart. We've been pointing to the upside right over here, and this is coming at the right time that we expected. So the S&P 500 and the VIX well in alignment, and really looking for this decline that we see here in the S&P 500, which right now is down 117 points on the day, looking like it's going to break that support and looking like it's headed down somewhere. I'm going to guess 6, 7, 8% on the downside for what is a fairly modest correction over these coming weeks. Let's take a look here as we look at the market condition monitor. So this is our proprietary algorithms that are built into this. It is fantastic. This is available for level 3 and 4. The difference is level 3 doesn't get the intraday that you see right over there. Level 4 does get all of that. So here we're looking at short term, and what's happened in here is that the indexes for the short term, which were bullish today and yesterday. You can see here yesterday that turned neutral for the IWM and the DIA. Today those turned neutral. So what was very bullish conditions has ended. The intermediate term, which we'll look at right over here, is still very bullish. You see, it's going to take some time for the deterioration in the shorter term to affect the intermediate term. So as long as it's like this, we're going to say, okay, this is a modest correction. Somewhere, 6, 7, 8% on the downside is reasonable. So there's your short term right over there, and you see neutral. But when you go to the near term, where you're really looking at, people that are traders or holders of just a few days, these are now turning slightly bearish to bearish. So this is the sign of the deterioration just starting right now in the market. Very important when you look at that. So back to the short term, you can see I have these bells are over here, and we have an application where you can get notified on your desktop, and I have this set to tell me when it turns slightly bearish, so that I will know when those things are getting worse. Let's just take a look at trade setup conditions in here. For all of these symbols that we're looking at. So you can toggle here, all stocks only, ETFs only, but I'm going to look at everything right now and say which ones are still very bullish. You can see that right over here, as the stocks that are very bullish are very apparent right there on the short term. We'll just run this down a little bit further so that you could see a few more of those. And if you want to look at the ones that are very bearish in here, you can see those right over here. As you see, HP Incorporated, Airbnb, Progressive Corp, Honeywell, Atlassian, Deere, those are very bearish. As you can see, let me just scroll down a little bit further in here, and you'll be able to see the ones that are more negative. So, Apollo, I just gave you that. If you watch the special I did on AI stocks earlier on Slim's Take, you'll see that I discussed Apollo in there, and you can see the stocks that are very bearish. So this is really just a great way to see when things are changing. If you would go to the near term right over here, it's telling you the ones that are changing today that have gone very bearish right over there. If you're an intraday trader and you take level 4, then this will also help you with that and show you which ones are very bearish or very bullish based on what's going on today on the intraday right over there. So just a great application that you can see that we use, and I think just a great way to look at the market. So we looked at the S&P 500 and the VIX. It looks like things are changing in a fairly significant way, and you could say it's because of a potential trade war, but at the same time, you have to say to yourself, there's more to it than that, and it doesn't take much to prick a bubble. That's probably what's happening right now. Let's see what happens in the next few days and if our indicators turn negative.